ONON, on running. This is the one that Roger Federer, when he was offered money by Adidas and by Nike, he said, nah, that's not really my thing right now. I really like these Swiss running shoes. And on running, that one has been running, Pete. Now it's had some pullbacks here and there, but a very strong report, great outlook into 2025 as well. And, you know, they don't sell cheap shoes, Pete. I'm sure you've seen it. It's at least the list priced on them is more like 140, 160 bucks a shoe. So these are pretty pricey, and people are still buy.
Yep. So the consumer's not totally dead, if anything else, like you were just saying. It is amazing, John. And what they've got from a growth perspective, when you look at their revenue, you look at their sales, they expect to see those profit margins at about 60%. I wonder why. Well, maybe because they can charge 140 bucks for their shoes, but that's okay. The free cash flow is there. They've got well over 300 million of free cash flow. John, the only thing that I would look at that I'd say you've got to be a little bit hesitant is this: the price to earnings, the PE, as we always like to call it. That's a little bit steep at 42 when you compare that to a Nike and some of the other ones, maybe the competitors, but a great balance sheet. They put up some pretty daggone impressive numbers. I like this one a lot. Obviously, it's become one of those very, very popular clothing type brands with shoes rather, but interesting to see how well they're doing. Now, will that continue through the rest of the next quarter? That's going to be something that we'll have to look at to see how exactly is the consumer strapped, or are they're just being very selective. And I would say right now, I'd say they're not really strapped. I think that they're just very selective on what they want to buy.